Hi everybody and welcome back to my channel. In this video I'm going to share with you a trade that I took in my account with the 5%ers using ICT trading methods. In particular, I took this trade during the London kill zone, which runs from 7 till 10 GMT in the morning, and I also took this trade in an attempt to trade the ICT Judas swing strategy. So I'm going to jump onto the charts in just a moment and share that trade with you, along with some pretty massive lessons that I took from the experience. But first, if you're new to my channel, my name is Emily and on Mindflow Trading, I share my journey as I grow and develop as a forex trader. I originally started trading around about 5 years ago, trading the US stock market, and since then I've gravitated towards trading the foreign exchange market. I also do this alongside being a full-time mother to my 1-year-old, and very recently I've also found out that I'm expecting my second baby, so it's all pretty busy this end. And it's also made my journey quite an interesting one because I've had to adapt my trading to suit my lifestyle. So if you're interested in joining me along this trading journey, make sure you subscribe to the channel below. Meanwhile, let's jump onto the charts. Okay guys, so I've loaded up TradingView here and I've got pound dollar, which is the one currency pair that I have been trading the ICT concepts with. And first of all, I'm looking here at the weekly view because the previous closing week candle was a bit of a pin bar, but it was still bullish, and I felt like my weekly bias was going to be bullish to sort of continue this run up and to basically fill in that wick. Dropping onto the daily time frame, I've taken this back in time using the backtesting tool to Monday. So this is going to be a walkthrough analysis of the trade that I took on the Tuesday, the 28th of March. But before we actually drop into a faster time frame to look at intraday price action, I'm going to just plot some daily levels that I was watching for Tuesday. So the first level, looking at Monday, the previous day, I like to plot the previous daily high, which if we look at the top is 1.22934. And I'll do the same for the previous daily low, 22190. And another area I was also interested in from the daily was this order block here from the previous swing. Now, order blocks are not something I've actually covered in great detail yet with ICT, so I do appreciate that my knowledge is probably not the best when it comes to order blocks. If you want to find out what they are, look directly at the Inner Circle Traders channel on YouTube. He has lots of free content on there. But the general theory is it is the top of this little pullback here that I'm going to mark with a trend line. You can see that the daily candle has actually used this twice for a little bit of support and bounced off, created these wick rejections. So straight away from the daily chart, we have been in the short-term uptrend, making higher highs and higher lows. And although we seem to just be consolidating a little bit at the top, the previous day was a bullish candle up. So I'm going to be bullish biased for Tuesday. So I'm just looking on the 4-hour time frame here, working my way with this top-down analysis approach, and Tuesday morning, this is the closing candle, the closing 2 o'clock in the morning candle. So I was looking at this around about 6 in the morning on Tuesday, just observing that we had that strong bullish day on Monday and price has continued to push up on Tuesday. Once I got this general idea of what I was looking for using the daily and the 4-hourly time frame, I was looking for longs. I've marked my key levels here. So I'm looking for price to come back down to interact at these levels for an entry. I then dropped to a faster time frame, which is what I use to actually plan and execute a trade. Now I'm going to just add a couple of vertical lines here, which both represents the London kill zone, which is from 7 until 10 o'clock in the morning GMT. So I've just marked the range of the current Asian session just before the London kill zone open, just to see that price has pushed higher than that previous daily high and it is currently being consolidated. So what I was looking for here was some sort of drop down to retest this previous daily high, which is what I would consider the Judas swing, because my bias is long. The Judas swing is generally going to be a swing in price in the opposite direction of the daily bias. So in this case, the Judas swing would be coming down here to grab liquidity before pushing higher. That was my plan for the morning. So as you can see, we're well into the kill zone here. We're getting towards the end of the London kill zone session. and price came down towards this daily level. Once it was in that area, I then dropped to a faster time frame to look at more detail in price action. So on the 5-minute time frame, you can see that we've got this bullish engulf in 5 minutes, showing that momentum is coming up, and that was directly at the previous daily high. Now, to add confidence to this trade, to add another aspect of confirmation, I also incorporated the Fibonacci retracement. Now, I actually took it from this level here because I felt like this was the low before this strong push up, dragged it to the top of the candle here, and you can see that price is reacting around this area of optimum trade entry using the ICT concepts approach to trend continuation, which basically means these 3 fib levels are the optimum places to enter into a trade. That's where I got my bullish candlestick signal. So all of these combinations, these techniques, I use to justify my plan for a trade long. So I set my trade at this level in the middle of that candle, and I set a 15 pip stop just below the lows here. And my target was initially just past the high, so I was looking for around about a 2.5R target. So I set my buy limit order just after that bullish engulfing candle at 95. Initially, I decided to set a 15 pip stop, which was well below this low, which is what I used to draw my Fibonacci tool from. Once I had this plan drawn out, I then decided that my stop was a little bit too large, and I edited my plan before I actually executed my trade. So I reduced my stop to 10 pips, which was just at the low of this fib tool. And the reason I did that was partly because I thought I'd be able to get a little bit more profit, and I reduced my target just underneath the high. So if price didn't break the high, I'd still get a nice profit. Once I'd done that, I set my alerts at significant price points that I could observe the trade and maybe take some portion of it off the table and leave some on. And then I turned off my laptop and walked away. Meanwhile, this is what happened. So I've just played what happened that trading day up until just after 5 o'clock GMT. And this is why it was big lessons for me, because yes, it was a losing trade. Now, another one down, another step backwards, another red trade. It's quite frustrating. It's never nice to lose, but it happens. But the thing to note here is that on the whole, I feel like I was pretty spot on with my analysis. I think I had the right idea. I think I used a confluence of all of these different strategies, tools, and techniques effectively, including the key daily level, the Fibonacci, the idea of this Judas swing drop down. The place that I went wrong was probably the fact that I got greedy with my profits, and that being said, decided to reduce my stop. Because if you remember, to begin with, I used a 15 pip stop and then I changed my mind. So I got stopped out. But if I used a 15 pip stop, it would have been tight, but my spreads would have held. The spreads are really good on the 5%ers, and the spreads in my personal account are also really good. Would have held that. And as you can see, price, although we did get a little bit of a pullback here during the New York session, it actually continued to go on up past 3R in the end anyway. So I had the potential there for a really great trade, and I ended up self-sabotaging it. So the biggest takeaway from me, the biggest lesson from this trade is probably to trust first intuition. My first intuition was to use a larger stop well below the lows. I should have stuck with that. Stops are really important, and giving a trade room to move is really important. Not getting greedy is really important. These are really significant lessons. And it's why I wanted to share this trade with you guys, because I wanted to show you it's like trading using ICT concepts, the way that you can combine them to form a trade plan, but also the way that trading psychology can really be a downfall. You can have the best plan in the world, you can have the best strategy in the world, but at the end of the day, if your emotions and trading psychology are just not at their top, then it's so easy to fail. Trading is such a fickle thing because the concept of trading is simple and yet so difficult. And it completely amazes me, to be honest, how it works. I've been doing this for years now, and the way that I feel that this simple activity of watching candlestick patterns, whatever this means, the matrix of the market, the way that it can affect you emotionally is amazing. And being able to I guess, deal with that and almost be able to control it, or at least manage that effectively, I think is probably the biggest challenge when it comes to trading. What do you think? So unfortunately, that was a loss that I took on the Tuesday on my account with 5%ers, and I have had a red week this week. But my account is still going, it's not the end of the world, there's always another day. And it's why I really do enjoy trading with the prop firm, the 5%ers, because they give you a lot of time with their programs. They do have different programs available now since their revamp. So they have their instant funding account, which is the account that I'm with at the moment. And that gives plenty of time to complete a challenge. So I am on the old system of instant funding. I had 6 months to complete my challenge. I've still got a good few months to go. So I just need to really take my time, take it steady, and focus on the best trades and also the best trade plan. But as you can see, these are the different options they have now for instant funding. So they have different account sizes, and with those you actually have up to 12 months to be able to hit the evaluation target of 10% and respect the rules, which is a stop out of 6%. Now this is a brilliant option, especially if you are a swing trader or if you prefer to just take your time, if you don't like to feel rushed and the stress and pressure that comes with having a time limit. This is definitely one of the best options in terms of a funding program from my prop firm. If, however, you prefer a more fast approach and you want to get funding quickly, you're a day trader or a scalper, and you take quite a lot of trades in a day, the high stakes program is maybe better suited for you, which is where they have 3 different account size options. You have up to 30 days to pass the challenge, and it is a profit target of 8% and then a max loss of 10%. Now there is a 2-step process with high stakes, whereas with instant funding there is just the one challenge. And once you pass, you gain access to a fully live account where you have a profit split with the 5%ers. If you want some more information, I have done a separate video that does cover a lot more detail, and I've got a link below in the description, so make sure you check that out. Meanwhile, if you've enjoyed this video, do let me know by hitting that like button below, and don't forget to subscribe to the channel if you're not already subscribed. Meanwhile, have a great weekend, and I'll catch you in my next video. Thanks for watching. Bye!